Hey, welcome to The Explainer. Today, we're diving into the restaurant industry because something huge has been happening right under our noses. Over the last few years, a quiet tech revolution has turned your simple dinner order into this massive digital battlefield with billions of dollars on the line. So let's get into what's really going on behind the screen.
I mean, think about it. The last time you ordered food, you probably tapped a few buttons on an app, right? Or maybe scanned a QR code at your table. But behind that super simple action, there's this incredibly complex and fiercely competitive tech ecosystem. And the big question is, who's really running the show?
So here's how we're going to break it all down. First, we'll look at the great digital shift that kickstarted everything. Then, we'll dive into the two competing models fighting for dominance. After that, the actual payoff for the restaurants. And finally, we'll get to the verdict. Who's built to last, and what are the big risks?
So, first up, how did an industry that was famously slow on tech suddenly go digital, like overnight? Well, it all started with a global crisis that basically forced its hand, turning technology from a nice-to-have into an absolute must-have for survival.
You know, before 2020, restaurants were pretty cautious about adopting new tech. But then the pandemic basically hit the fast-forward button, cramming years of digital evolution into just a few months. All of a sudden, online ordering and contactless delivery weren't just perks anymore. They were lifelines. And now? Well, tech isn't going anywhere. It's become a core part of the business strategy.
And you can see just how permanent that shift is. A staggering 94% of restaurants in the US now offer contactless payments. This isn't just some temporary trend that's fading away. It's a fundamental change in how they operate, all driven by what we now expect as customers.
But, this rapid-fire adoption created a brand new problem, something called software bloat. Just imagine you're a restaurant owner juggling one system for your reservations, a completely different one for online orders, and a third one for delivery apps. The catch? None of them talk to each other. It creates absolute chaos and locks away super valuable data. And that inefficiency, well, that sets the stage for our main event.
Right. So this chaos created the perfect opening for tech companies to swoop in. And what emerged is the central conflict we see today, a tale of two very different business models, with two types of giants fighting to become the one indispensable partner for every single restaurant out there.
So on one side, you've got the aggregators, think DoorDash and Uber Eats. Their main customer is you, the diner. Their game is all about building a massive marketplace and handling the logistics. Then on the other side, you have the integrated platforms, like Toast or Square. Their customer is the restaurant itself, and they're not just a tool, they're trying to be the entire operating system for the business. Two completely different playbooks.
So the aggregator's secret weapon, their competitive moat, is what's called network effects. It's a pretty simple but powerful idea. The more people like us who use an app like DoorDash, the more restaurants feel like they have to be on it. And the more restaurants there are, the more choices we have, which, you guessed it, brings even more people to the app. It's this incredible self-fueling growth engine. Now, the integrated platforms, they have a totally different kind of moat. Theirs is all about making themselves indispensable. Once a restaurant is running its entire operation, we're talking orders, payroll, inventory, everything, on a system like Toast, it becomes the central nervous system of the business. Trying to rip that out and replace it, it's a complete nightmare. It's expensive, it takes forever, and it could seriously mess up their business. They make their customers incredibly sticky.
So we have these two models, these two different strategies, battling it out. But what exactly are they fighting over? Well, the scale of the prize here is just absolutely massive.
Right now, in 2024, the market for all this restaurant software is worth about $15 billion. And yeah, that's a huge number. But honestly, that's not even the most interesting part. The real story is where it's all going.
By 2030, that number is expected to explode to around $40 billion. That's a growth rate of about 14% every single year. And that is why this has become one of the hottest, most intense battlegrounds in the entire tech world.
So why are restaurants willing to shell out so much money for this stuff? Well, because this technology isn't just a fancy gadget, it offers a really clear, tangible return on their investment. Let's dig into how these platforms actually make a difference to a restaurant's bottom line.
It really boils down to 4 key areas. First, they help optimize labor with AI-powered scheduling. Then, they help cut down on costly food waste with real-time inventory tracking. They can actually increase sales using clever tools like automated upselling or loyalty programs. But maybe the biggest thing is they provide real, actionable data,
which means managers can stop guessing and start making smart, data-driven decisions.
And to really understand the impact, just look at where a restaurant's money goes. Food and labor are the two biggest slices of the pie, making up a combined 65% of their costs. So it's no accident that these platforms are laser-focused on tackling a restaurant's two biggest and most unpredictable headaches.
And we're not talking about small potatoes here. Get this, up to 10% of the food a restaurant buys gets wasted before it even has a chance to make it to a plate. So a platform that can track inventory perfectly and prevent overordering, that can immediately plug a massive leak in a restaurant's profits. It's a game changer.
Okay, so we've seen the revolution, we've met the players. Now for our final act, let's get to the verdict. Based on the analysis, which of these models is the better long-term bet? And, just as important, what are the big, scary risks that could completely derail them?
Well, the verdict from the source material is pretty clear. It comes down hard in favor of the integrated platform model, the operating systems like Toast. And the reason is twofold. Their revenue is predictable, recurring, and high margin. And maybe most importantly, they're mostly shielded from the biggest regulatory threats looming over the delivery giants.
And this risk chart, it really tells the whole story. Sure, a recession would hurt both models, but look where all the high-impact risks are concentrated. Regulatory fee caps, intense competition, and the huge one, gig worker reclassification, they all fall squarely on the shoulders of the aggregator model.
And that reclassification threat, that's the real monster under the bed. The idea that these companies might be forced to treat their drivers as employees instead of independent contractors, well, it's described as a potentially existential threat. It would fundamentally shatter the entire cost structure for companies like DoorDash and Uber Eats.
But, beyond all the profits and risks of today, there's this ultimate prize that everyone is really chasing. And that prize is data. Total control over the industry's data. The company that can figure out how to combine the data from inside the restaurant with all the data from delivery orders, they will have an advantage that's almost impossible to beat.
Because right now, that data is completely split. The aggregators know everything about our delivery habits, who we are, when we order, what we like. But the integrated platforms, they know everything that happens inside the restaurant. What's popular on the menu, how much inventory they have, how efficient the staff is. Neither one has the full picture yet. And bridging that gap is the final frontier in this whole tech war.
So I'll just leave you with this final thought. The next time you open an app to order a pizza or some tacos, just pause for a second and ask yourself, who am I really feeding here? Is my money strengthening the local restaurant I want to support, or is it feeding the incredibly powerful tech platform that's quietly reshaping this entire industry from the inside out? The answer is probably a lot more complicated than you think.